Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information, meet you where you are financially so that you can stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to offer you an opportunity. If you have a lower credit score, but you're still in a position to buy a home, what can you do? If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. Well, guys, it's such an exciting time if you're in the market for a home or if you already have a home to refinance. The good thing about it is with this pandemic, it's brought rates extremely low. So people who a year and a half from that, year and a half past, who may be at a 4%, 5%, even 6% on their mortgage can save huge on their largest line item in their budget. But while it's also spurred activity in the refinance market, it's also additionally spurred more opportunity for purchases, meaning really become very tight. Homes are being sold at a very rapid rate. Prices are going up, but yet the rates to buy a home are extremely low. So it's still a great opportunity. But what about you if you prepared and you just have a lower credit score, meaning you might be in the 640, 650 range? Is it still a good time for you to buy a home? Well, let's unpack that now. For a few of my videos, I've spoken highly of what you should do if you're purchasing a home. And most often you'll use the conventional. And what's the difference between the conventional and FHA? And typically it's the borrower. So a FHA is typically geared to that first-time home buyer with a lower credit score. But in this unique opportunity of where we are right now, it does present an opportunity where you can actually sit down and really crunch numbers it could be favorable for you. And what does that mean? Well, if you're a first-time borrower at 640, you're not going to get favorable rates under a conventional loan. But under FHA, you would necessarily get favorable rates. Right now, FHA, when I run it, it's been about 2.375, which is extremely cheap for a home. But we also know with a FHA, yes, you're going to have PMI, but you would have that with conventional. But the FHA real kicker is you're going to have a month mortgage insurance premium in the closing costs. And the PMI you can't actually get rid of. So there again, ask the question, okay, if I'm getting this excellent rate, but then I have to pay this PMI and I can never get rid of it, and I also have to pay a little mortgage insurance premium in my closing costs. Is this truly a value? Well, this is where you have to ask yourself the question, like all big purchases, how long do you expect to be in the home? Because if you bought a home and your score is a little bit lower, naturally over the next couple of years, your score will raise and you'll qualify for probably something else if you don't, when you move or whenever you're going to move. So it's really going to be dependent on timing. Just like buying points, it's all dependent on timing. How long do you expect to be in the home? If you know over the next 3-4 years, hey, I'm going to be in this home, but I'm actually going to move, then it could be a good time to buy to help yourself, prepare yourself, and gain some equity while getting yourself prepared for that next purchase where you would qualify for something a little bit more favorable. But why else do you want to consider that? Well, statistically speaking, between that 5 to 7 year mark, people typically either move out the home, refinance the home, or sell the house, do something with their home. That's just traditionally. So that's why most mortgage companies like to charge interest a lot up in that first 7 years, because after that, the person, or during that time, that's when the person actually does something different to the home. Well, why would somebody sell? Well, your value could have went up. And so you can take the equity that you have in that home and go buy a bigger home and be paying the same mortgage. There's a lot of different reasons and different events that will cause a person to particularly sell the home. But this is just statistics. But if you're in a FHA scenario and you know you're going to move and you're planning on moving, this could be your stepping stone where you can maximize where the interest rates is, understand that, hey, I'm going to probably be paying a premium, but I was going to pay that anyway if I'm not going to pay down to 80% over those next few years, and gain some equity during that time, as well as again, with the home being on your credit now, it's going to help grow your credit score to where you'll qualify for much more or get a better scenario next time you get ready to buy. So you'll have a lot more in this. It can be a great opportunity, but again, guys, everything always comes down to not just percentages, but I like you to look at the dollars. Look at the dollars. Look at how much you're going to spend. Mortgage insurance premium, it's about the same. If you pay $80 to the conventional, those have dropped too. It's going to probably be the same in the FHA. So it's really just a thing of how long will you keep the home. Keep this in mind, guys, as you're looking at ways to start to build your wealth even within what you're doing. But just because you have a low credit score, and that's the purpose of this video, doesn't necessarily mean that during this time you don't have opportunity as well. And that's what we want to do. Meet you where you are to help you build your wealth. If you haven't already, guys, please like this video, comment below if you're in the market, subscribe if you haven't subscribed. And also, we was giving away 2 free stocks. They changed it up on us. 2 free stocks when you click the link below and deposit $100 on the platform. Hope you guys enjoyed this video. And I can't wait to see you guys in the next video.